Good morning, everybody. Happy Tuesday. We have an amazing show for everybody today. What do we have, Krystal?
Indeed, we do. Lots of big stories breaking this morning. We have a deep dive for you into the housing market. A lot going on there in terms of housing costs and prices and rent prices continuing to go upward. So we will break all of that down for you because the picture is a little bit complex and a little bit nuanced. Also an update for you out of Puerto Rico where residents are still without power and without water. This is, 5 years after Hurricane Maria hit? And it seems like, very few of the upgrades that needed to be made to protect Puerto Rico from another storm have actually been made, even though the money has been there. So we are going to take a look at what the hell is going on the ground there. Also, some eyebrow-raising comments from current President Biden. In that 60 Minutes interview, he was asked, is he running again? And he would not answer. So we will break that down. And also Gavin Newsom saying unequivocally, well, his aides are leaking unequivocally that he will run if Biden does not. So we'll break that down for you. Also, some new details about 2022. Kamala Harris out on the road trying to rev up the young people. You know how the young folks just love Kamala Harris.
Yes,
I'm sure that's going to be a very effective strategy for the Democrats, as well as a prominent journalist sounding the alarm bells about a potential civil war. We'll break all of that down for you. We also have a big picture look at the midterms. There's some new data out that has some warning signs for Democrats. We've had, a lot of numbers that have been pretty positive for Democrats recently, but Republicans have actually been turning out at higher rates in the primaries. Is that indicative of a broader trend for the midterms? We will ask our friend J. Miles Coleman about that. Let's get to the housing market in particular and put this first piece up on the screen. So some brand new numbers underscoring just how expensive it is getting for people to buy homes. Why? Because mortgage interest rates are skyrocketing along with the Fed's actions. This tweet says the average 30-year fixed mortgage rate jumps to 6.42%. That is the highest reading since 2008. Let's take a look at this next piece, which is similar. The average monthly mortgage payment in the U.S. has shot up thanks to the Fed. This is from our friend Joe Weisenthal. He says, that might push more people into renting. If I were a landlord, I might be tempted to raise the rent even more. By the way, when you look at these numbers, so the monthly mortgage payment for someone who's buying a home is now over $2,000. That has more than doubled since March 2020. So just 2 years ago, less than 2 years ago, if you were buying a house, the average monthly mortgage payment for someone buying a home was $1,000. Now it's $2,000. I mean, that is insane, the escalation there. Calculations based on the median existing home price, average 30-year mortgage rate, and assuming a 20% down payment. And at the same time, you can see the way that, housing becoming so expensive means that more people are forced to rent. Let's go ahead and put this next piece up on the screen. Guess what? Rising rent prices are keeping inflation high. So we covered this when we got the last inflation numbers, that a significant part of why we continue to see rising inflation numbers is because rents continue to escalate. Shelter prices rose 0.7% in August. That is the biggest monthly jump since '91. So huge numbers there. One of the biggest drivers of inflation, they say, has been higher rent prices, according to data from Zillow. The typical U.S. monthly rent was $2,090 in August. That is up 12.3% from just a year before. That is much higher than it was before the pandemic. In February 2020, the nation's average rent was $1,660. So even though big picture in a majority of markets that are being tracked now, these sort of housing price, like the sticker price of houses is going down, the costs are going up because mortgage interest rates are so incredibly high. Also, we haven't seen that great of a decline in these markets. Why? Because people who are in their homes now, they likely have a low mortgage interest rate.
Yes.
So they don't want to move right now.
They're not going to sell it. Right.
They don't want to sell. They don't want to move because they know they're going to then get hit with these high mortgage interest rate costs, and that'll screw them over. So a lot of people are holding on to their houses even though they might in other conditions sell. That's limiting the inventory that's available. So even though we have seen some price decline, it's not like this huge crash in the prices that makes it, compensate for the fact that mortgage interest rates are now so high.
Yeah, exactly. So once again, just to explain it, whenever the housing market is more inaccessible, even to higher bidders, people who would have bought otherwise, they're going to rent. Whenever they rent, that pushes out other customers down to a lower tier, so they get lower quality housing roughly at the same price because rents are rising, and we have a housing squeeze. At the same time that we already have a major housing shortage, what's happening is that the home builders themselves are going to either delay construction, or they're not going to bring their full houses to market because they don't want to sell in the middle of the downturn because they can't recoup their investment. And they know that it would be much better either to hold it, they can pause construction, they can work on other projects and other things. So that means that the available housing stock goes down. So you almost have a squeeze of rental markets. And once again, it's the poor, the working class, and frankly, even the middle class at this point, who are all basically renting. I mean, it's almost nearly impossible to buy a house otherwise. High mortgage also makes it so that buying is not at the same value proposition, even if you do somehow miraculously have the cash in order to save and to buy a house. So it's a very, very bad situation all the way around. And finally, just to bring it back to inflation, I mean, you could say, like, if rent right now is only up by 0.5%, quote unquote, over last month, here's the issue. Because it went up so high in 2021, so many people are locked into these astronomically high rates. And because the rate of rent has not gone down, whenever they have to re-sign, they still have to re-sign at a very, very high rate compared to previously. So this really is all in the favor of capital and the ownership class, because the ownership class, like, if you're a landlord, you don't care if the washing machine is broken. I recently heard a story of somebody who had to rent a house and had to bring their own washer and dryer. Have you ever heard of such a thing?
No.
And the renter was like, "What are you gonna do?"
Rented plenty of apartments
Yeah,
that just
I've rented
don't
probably
have washer and
10
dryer in them.
places.
And that's
Right.
certainly in New York City very common.
Yeah,
but
this
to
is
be
not
like,
New York.
Bring your BYO washer
This
and
is
dryer.
not New York. They're like,
Wow.
you gotta buy your own washer dryer.
That's crazy.
And they're like, are you serious? And it's one of those things where it's like, okay, well, I can find somebody else who'll do it. So, they have all the power and they don't have to fix anything.
You also think about the fact that, okay, so if prices come down, and they have come down in the majority of markets, housing prices have come down, but mortgage interest rates are so high that it's not like your monthly payment is going to be any lower. In fact, as we're seeing, it's like double what it used to be. Who does that ultimately benefit? Well, it benefits rich people who have cash that they can just, pay a house in cash, and it benefits primarily permanent capital because they can take advantage of the lower prices and not have to deal with the higher financing costs because, again, they have the cash up front. Those are the people who benefit most from a market like this. So in a lot of ways, the Fed's policy, which, let's be clear, is really aimed very directly at the housing market. I mean, Jerome Powell said flat out, he said, I'd say if you are a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together and where inflation is down low again and mortgage rates are low again. So he's saying very directly, like, we are targeting the housing market with our actions.
Right.
What they have created thus far is a worst of all possible worlds. You still have low inventory, both because of the phenomenon I talked about, home buyers holding on to their houses because they don't want to get hit with these high mortgage interest rates. You have home builders not having new housing starts because their financing rates are also higher. So you have a low inventory, which is keeping prices relatively high. I mean, so we are seeing somewhat of a downward turn in terms of that. And then the costs are so high because of mortgage interest rates. And then that trickles down to the rental market. So people there are getting screwed as well. So it really is a bad situation for everyone. And if you're an existing homeowner, I mean, you're in a better position than anybody else. But also because the prices are declining, you're seeing your equity being eaten away.
Yeah, you're just
bit
locked
by
in.
bit.
More
and you're
what it
stuck.
is, you're stuck. Like, you're not going anywhere. I saw a story of somebody who had like a 1.5% mortgage rate. By the way, I don't even know how that exists, but apparently they grabbed it. They must have got it at the exact same time.
Perfect day.
And they're like, I'm not going anywhere. They're like my house. They're like, every house around me could burn down, and I still wouldn't move because I have to stay here. They're like, I have no other
I will
options.
never achieve this deal again.
Right. I mean, they're not wrong.
It's not a bad problem to have in that case.
Yeah, obviously, this is somebody who, I think this person I'm talking about is a Washington Post columnist, so they're doing
probably
fine in
fine.
life.
Yeah.
But the point being that behavioral incentives are real. The market is now constructed such that rent is probably either going to rise for the foreseeable future if rates don't come down. Yes, it's nice that the sticker price on the home goes down. It's bad that the mortgage rate goes up. And that generally, without any more access to capital for normal folks, that means that you're still even more out of the league whenever you're trying to buy a house.
Yeah, I really, wanted to do this segment with the people in mind who say overwhelmingly they're actually rooting for a housing crash because they see the way that prices have just escalated like crazy and the way that they've been priced down on the market and how insane it's been where it's like, oh, I have to have, 80% cash down in order to even compete in this market. And we were covering those stories of, remember that house here that was like, it was unlivable. I mean, it was a total in shambles and it still sparked this bidding war of, do you remember how it
sold
was
for
like,
$1 million?
It sold for $1 million and had some insane bidding war of like 86 people or whatever. I'm making these numbers up, but it was crazy.
There's one in Virginia that had squatters inside of it. They're like sold as is, squatters in the
Squatters
basement.
included.
And you have to deal with it. Like, they're like, we haven't resolved this.
So
and somebody bought it.
I understand people who are looking at the housing market and saying like, crash baby crash, because I want at some point in my life to be able to be a homeowner, especially when that is the most like critical class dividing line at this point in this country is like people who are asset owners and people who aren't. And homes are obviously the primary asset that most like ordinary Americans own. I just want to say it doesn't look like we're headed in that direction. I mean, even as prices do come down somewhat, it is not nearly enough to make up for the increase in mortgage interest costs. Fortune had a good piece sort of breaking down how this will all go, the different phases, they say, of the housing market downturn. Let's go ahead and put this up on the screen. So they say we now have clear evidence the housing market downturn has moved beyond the first stage, which is a drop in housing activity, that's like people buying homes, and into the second stage, which is falling home prices. So they say the home price correction is spreading. This is what I was talking about. Out of 148 regional housing markets that are tracked by some real estate consulting firm, 98 out of 148 have seen home values fall. Only 50 markets remain at their peak. Now, to give you a sense of how much they've fallen and that it's, nowhere near the home price decline that we saw back in the housing crash in 2008. So at that time, we saw a peak to trough U.S. home price decline of 27%. Right now, they're estimating that significantly overvalued housing markets, so places like San Francisco that have been just completely insane, they might see a drop in the 5 to 10% range. So nowhere close to the massive drops we saw during the housing crisis. Not that the housing crisis was ultimately good for anyone. It was another instance where it was great for permanent capital who bought up all these distressed properties and now are making money hand over fist on them. They also say that the housing downturn, and this is very intentional from the Fed, will soon spread beyond housing because you've got massive declines in home sales, both new home sales and existing home sales. They've fallen by 30% in terms of new home sales, 20% in terms of existing home sales. You've got all these home builders and places like Zillow and Opendoor, whatever, struggling financially. And so as home shoppers put a pause on their searches, that means you see decreased demand for all sorts of other things. I mean, think of all the inputs that go into a house. The washer and dryer, like you were talking about, the refrigerators, the appliances, lumber, everything that goes into a house, you see a decline in demand for those things. So that's why when there's a housing market downturn, it spreads throughout the economy. Now, again, that's actually what the Fed is hoping for because this is apparently the only way that our political class can figure out how to deal with the rising inflation is like, let's screw regular people over and make it so that they're able to purchase less things. So that will be the next phase is basically the housing market downturn spreads to other sectors of the market. And then you've also got some details here. Let's put this last piece up on the screen of some of the housing sort of companies, housing adjacent or affiliated companies that are really struggling in this market. This home flipper company called Opendoor, which I actually never really heard of, but their whole idea was like facilitating home flipping.
Yep.
They're having big problems. They lost money on 42% of their August resales. They've seen, median home prices because they've declined. That's really screwed them over. But instead of canceling contracts, they decided to make good on the offers they'd already put out there. So they have seen a huge hit, and they're not alone in terms of other companies that are in the home buying and selling business.
Yeah, I think it's important. I mean, really what's being underscored on all of this is just how precarious all of the market is. And there's a lot of downstream effects. So I'm glad that you put it the way you did, which is that, yeah, you may wish for a housing collapse, but there's a lot of other stuff going on.
Yeah.
So let's all just be very mindful about what's happening.
Yeah, unfortunately, it's not likely to benefit those people who are just hoping to get their foot in the door, no pun intended. Okay, the other piece here, which we've already referenced, is what the Fed is going to do and what they already have done. Ken Klippenstein has really been on top of sort of tracking tracking some of the research about what the Fed's actions may ultimately, what may ultimately happen with them. Cable news is ripping us apart, dividing the country, making it impossible to function as a society, and making it impossible to know just what is true and what is false. But the good news is they are failing and they know it.
That is why we're building something new, a new mainstream, a healthier one, something more trustworthy, something that we are going to need in one of the most pivotal times in American history. We are building up here for the midterms, for the upcoming presidential election, but we need your help. So if you can help us out by becoming a premium member today at breakingpoints.com, we're trying to change America for the better and the entire world.
So what are you waiting for, guys? Go to breakingpoints.com and sign up and help us build a new mainstream.